I am D K Sinha and you are watching DK Global Market Insights. Is the US market looking weak or preparing for a comeback? Is the pullback finally over or are we just in the middle of a bigger correction? Before we start, an important disclaimer. Stock market returns are never guaranteed, but when we do the research and deep analysis, we get an edge in the market, but risk management cannot be ignored. So, what we will cover today? We will quickly look at how the major US indices performed this week, what's happening in the global markets, how sentiment and volatility are shaping up, and macro pulse driving the investor behavior. Then we will move to the charts of S&P 500, Nasdaq 100, and market of the week Hang Seng to understand the price action, support, and resistance zones. Let's begin. US markets this week. This week, all four major US indices ended in the red. S&P 500 was down 1.63%, Nasdaq 100 fell 3.09%, showing deeper weakness in the tech space. Dow Jones slipped 1.21%, Russell 2000, the small cap index, dropped 1.78%. So clearly, the weakness was broad based, but the heaviest hit came in growth and tech stocks, which had led the rally earlier. Investors are shifting toward defensive sectors, waiting for clearer macro signals. Global markets overview. Let's look at how the global markets performed this week. UK's FTSE 100 down 0.36%, Germany's DAX down 1.62%, Japan's Nikkei 225 down a sharp 4.07%, India's Nifty 50 down 0.89%, and the surprise outperformer Hong Kong's Hang Seng index was up by 1.29%. So while the majority global indices ended lower, Hang Seng index stood out. That is why we are calling it our market of the week. Market of the week. The Hang Seng index rose 1.29% this week, supported by optimism around Chinese tech recovery and policy easing in property sector. However, whether this bounce is sustainable or just a short-term relief rally, that's something we will verify later when we go to the charts. Precious metal this week. Now let us see how precious metals behaved. Gold, that is XAU USD, was almost flat, just down 0.04%. Silver, XAG USD, fell around 0.79%. This tells us that despite weakness in equities, there wasn't any panic shift towards safe haven assets. Investors are cautious, not fearful yet, but positioning lightly ahead of the fresh data. Sentiment, momentum, and volatility. The overall market mood has clearly turned risk off. The fear and greed index has dropped to 21, showing extreme fear compared to 48, that is neutral zone, just a week ago. The put call ratio stands at 0.71. That's another sign of defensive sentiment. In the momentum chart, the S&P 500 is now quite closer to 125-day moving average, showing loss of near-term trend strength. And the VIX volatility index jumped 9.47% this week to 19.08. That's not alarming yet, but it does tell us that volatility is back on the rise. In short, fear is creeping in, traders are hedging, and the momentum is a little bit slowing. Macro pulse and latest news. This week's macro backdrop in the US was quite unusual because of the ongoing government shutdown. Due to the closure, several key economic reports were not released, including all important jobs report. Economists surveyed by Dow Jones estimate that the economy would have shown a loss of about 60,000 jobs and a slight uptick in the unemployment rate to around 4.5% if the report had been published. This blackout has created what analysts are calling an economic data void. Investors have fewer signals to track, which is adding to markets' uncertainty. Meanwhile, treasury yields remained largely unchanged. 10-year yield at 4.09%, 2-year yield at 3.56%, 30-year bond at 4.69%. So the bond market are in wait and watch mode, reflecting mixed expectations about the Fed's next move. On the positive side, the US Composite PMI came in at 54.6 for the month of October versus 54.8 in the month of September. That's a small dip, but is still above 50 mark, meaning US economy is still expanding, though at a slower pace. To sum up this macro picture, no jobs data, limited visibility, PMI above 50, economy is still resilient, yields steady, investors uncertain but not panicking. So we can say macro tone is moderate cooling, not a collapse at all. Chart analysis. Now let us switch from data to visuals. The technical side. We will study charts of S&P 500, Nasdaq 100 and Hang Seng index to observe current price action, support zones and resistance levels. Let's move to the charts. If you trade without learning, markets will make sure your money finds its way to someone who did. Learning is the only edge in this zero sum game. This is the daily price chart of S&P 500 index. Earlier we had discussed about these two consecutive gaps and then a gap up opening and an exhaustion in the market. Look at these three candles. This itself is showing the loss of upside momentum. Bulls tried to push the price higher because each day market opened with a gap up, but they could not sustain and ultimately market corrected and there was a pullback. But what has happened during the last trading session of the last week? There is a sharper recovery in the market. Price respected EMA 55 and there is a large lower shadow formation over here. This particular area has a good confluence. One, the confluence of this EMA 55, then this rising trend line which is acting as a dynamic support. So this was the confluence and earlier this was the area where the price consolidated. So 6,655 to 6,696 becomes the immediate demand area in S&P 500. Where is the resistance? Look at this area where the price each day gapped up and then it started falling. So 6,822, 6,860 becomes the supply area. But once the price takes out this supply zone, the S&P 500 is likely to make new high. Can we get some more confluence? Let me do the retracement analysis. So I am using the retracement tool and taking it to the top. Can you see the price has taken supported golden ratio 61.8% retracement level. So once you try to locate the confluence and multiple confluence suggesting the same thing, which means you can locate the demand and supply area on the price chart. This is the daily price chart of Nasdaq 100. Here too we can see the sharp recovery and a formation of a bullish pin bar. Here too the price respected EMA 55. We can draw here two types of trend line. This price has taken support here and once again is taking support here. We can draw the trend line in another fashion. Price has taken support here, taken support here, taken support here. So zone between these two trend lines is the demand area or dynamic support area. Earlier price has consolidated in this area and then price has taken a support at this trend line which has a confluence of EMA 55 and similarly if you do the retracement analysis of prior impulsive buy, this too is bouncing for an important retracement level. So 24,600 to 24,800 is the demand zone in Nasdaq 100. Where is the resistance? There is an existence of a gap over here. So 25,750 to 26,000 is the immediate supply area. Now this is the price chart of Hang Seng index. First do the trend analysis. EMA 21 is placed above EMA 55. EMA 55 is placed above SMA 144. The slope of SMA 144 is rising. Slope of SMA 200 is rising. So overall trend is bullish. Short-term trend, intermediate trend, long-term trend are bullish in Hang Seng index. Look at the price action. Market structure is higher highs and higher lows kind of market structure. We can draw the trend line. Price has taken support here. It has taken support here. Once again taken support here and taken support here. We can draw another trend line. Price has taken support here. Price has taken support here. Price has taken support here. So these two trend line represents the dynamic support zone. At the same time, there is a confluence of EMA 55 which will provide the dynamic support to Hang Seng index. There is an existence of a gap. So 25,900 to the gap area, that is 25,980 is the demand area. During the last trading session, there is a formation of a bearish harami kind of candlestick pattern, which shows there is a lack of upside momentum. So considering the price action, this was the area of breakdown. So 26,750 to 26,973 is the immediate supply area. But once this supply area is taken out, then we might see an upside momentum developing in Hang Seng index too. Conclusion. The key takeaway: fear has returned, volatility is rising, and momentum is weakening. But remember, every pullback also builds the base for next move, and that is what we have seen on the price chart. If you want to understand how markets behave in different phases, explore the 0 to Hero playlist on D K Sinha, our main channel. They will help you decode price action in the right fashion. Learning never stops with D K Sinha.
Let's start with this stock market 101 video.
Good idea. It covers the basics.
Yeah.
Yes.
And then maybe the common mistakes one.
Yes.
Yeah.
So we avoid those.